How's it going, Option Sharks? This is your option coach here, and today I want to cover about when do you sell puts. Okay, when do you sell puts? This is a part 2 video. The first one was when to sell calls. Now this is a part 2 for when to sell puts, and those two combined, selling calls and selling puts combined together, is the wheel strategy, right? Which is the most fundamental, no-brainer, cost-efficient, semi-passive, best strategy for those that do not like risk and just want to generate safe and consistent income. The wheel strategy, hands down, is the best strategy, right? The only risk you have is doing the strategy on a poor quality stock. All right, so let's get right into it. So in this video, when do you sell puts? Okay, so you sell puts when you want to build a position on a particular stock that you want to get into. All right, so most commonly people regularly just buy into the shares. They just buy the stocks outright. You can always do that, okay? You can. There's nothing wrong with that. If you don't want to, if you're very bullish on it, you could just buy the stock and own the shares, okay? Now, if the stock's kind of trending sideways, and you want to build a position around it, but you don't want to buy the stock, what you can do is get paid to own the stock, get paid to build a position. So let's just use example as Robinhood, as Hood is my money making stock at this moment, and Hood is trading around 105. So what do you call it? If I want to build a position around Hood, I could just buy the 105, the stock trading at 105, and just buy the stock outright. Or I could sell a put at a strike price at which that I want to own the stock for. So in this case, let's say I like Hood and I want to own Hood at 100 strike price. I would much rather own Hood at 100 than at 105. So rather than just buying the stocks at 105, I could just sell a put at 100. So this gives me the right to own Hood, Robinhood, if the stock were to dip to the strike price of 100, all right, on the day of expiration at the close of bell, and the stock's trading below 100 or at 100, I will be assigned the shares. All right, so this is how you can sell puts to build a position and get paid, right? So get paid to open it, get paid to build a position, get paid to build out a position, pretty much just like that, like I said. And then if you are looking just after income, then you can actually pick a strike price that is not close to, not in the money, not close to where the stock is trading at. So same example, if Hood is trading at 105, and actually I just want an income, I don't even want to get assigned the shares, all right, I can sell a cash secured put way below 105. I could do like around 90, 95 and get paid and generate income for that, because I see the stock, my technical analysis, I see the stock's trading sideways or it has a slight upward trajectory. I don't want to own the shares. I just want to generate income safely and consistently. I can sell a put, right? Now, if I want to build a position, right, like I said before, then you want to pick, and I like to build a position at 100 strike price, then you can sell a put at 100. So you can be aggressive with it, passive with it, and it just depends on your sentiment of the stock. If you're just after income, or you want to build a position out at a strike price that you want to own it for and get paid to do that. Now, obviously, when you sell a put, you need to have the cash collateral to open the trade. So in this case, if you select a 100 strike price, one option contract is 100 shares. 100 shares times strike price of 100, that is $10,000. So you need at least 10K to open a cash secured put trade, options trade for Robinhood, all right, at a strike price of 100. So let's just say if the strike price, if you select a 990 strike price, then the cash collateral needed to open the trade is 9,000. Okay, so it's 90 times 100, because one option contract is 100 shares. All right, so that's how when you want to sell puts, depending on your sentiment, if you want to build a position out, then sell it at a strike price that you want to own the stock for and get paid for it, or you could just buy the stock outright. And if you don't want to own the shares, you can just sell a put further out of the money, low delta, just to generate income, generating cash. Okay, so if you like what I shared today, like and subscribe, leave a comment. And if you are in the markets, you're fairly new to the markets and you want to learn how to trade options, I coach all my members on a one-on-one base. I help you generate anywhere between 3 to 10% per month. And I literally handhold you through the whole process. And the link to book a time is in the description or in the comment. Love to speak with you to see if we're a fit. And then, like usual, stay tuned for the second half of this video. I'm going to include a live sample of a coaching call that I do with my sharks, so you can see me in action. All right, and then other than that, if you enjoyed this video, leave a comment, like it, and then I'll see you on the next one. Okay, so what I was saying is, for Hood, the 125 call, we're gonna just let that expire naturally, and let the earnings play out, which is after the bell today. And then when the dust settles, then we know where we should sell the next cover call, because after the earnings call, the stock could just shoot up really high. And if we sell the cover call too soon, we might get caught in our strike. And then we don't want to do that. So we want to keep that, let this one expire naturally, and then
Hmm.
let the dust settle. And then we'll revisit on what's a better strike price for a cover call. The Hood 105 put, that one we want to revisit on Friday to see if it becomes worthless. And if it becomes worthless, then we can roll the put for the following week. All right. Now, if it goes close to 105 or it dips below 102, 103, or 101, doesn't even matter. Let it get assigned the shares. Get assigned the
Okay.
shares. You want to own Hood, right? You want to build a position around Hood. So depending on if it's worthless, we roll. If it's not worthless and it's expensive to roll it out or to close it, then we're just gonna get assigned to own the shares. Because once you own the shares, then now you can sell cover calls. Plus, you want to kind of be long term on Hood, right? Build a position out. All right.
Okay.
Uh, tomorrow, the 19 put, that one needs to be. We need to roll that on Friday as well. So keeping the same strike, everything the same, just picking the expiration August 8th.
August 8th.
Okay.
Okay.
Yeah. So just make sure to remember to do these things.
Yeah, I'm
Uh,
gonna put it in my calendar right now.
yes. And I recorded it right now so you guys can go back to this. But Hood, we let it
Cool.
expire naturally, the 125 cover call. The 105 put, if it's out of the money and worthless, then we roll. If it's in the money, we leave it and we get assigned. And then Mara, I think Mara's trading at 17 and change.
Hmm.
So that's in the money. It's 1696. Mara, we want to roll the put more than, I don't know if it's gonna go above once it if it goes above 19, then we just let it expire naturally. We don't need we want to release the collateral and just get out of the trade. But if it's still in the money, then on Friday we want to roll this exactly the same. Just keep the same strike, but for August 8th.
Hmm.
Got it?
Hmm.
Cool. And then the Pony 14 put, that one, I think that's in the money or close to the money. Let's see. Yeah, it's in the money too. So same thing, Pony. On Friday, we're gonna roll the put. We're
Okay.
gonna roll
So
it to
Mara.
yeah, keep the same strike, 14 strike, and roll it to August 8th.
Okay.
Right. Now, if
Okay.
it does go above 14, if it recovers above 14, then just let it expire naturally. Just let the trade get out. Let it exit out the trade by itself.
Okay.
Okay.
Yeah.
All
Sounds
right.
good.
But you do know how to roll the put, right? Keeping the same strike and
Yeah.
everything.
So I would just go here. We would go roll this position.
Correct.
Leave it
Sell.
August 8th, and
Yes.
then we would do the 14, right? You said?
Bingo. The same exact thing.
Yeah.
Actually,
We
you get
just
paid
roll it
right
out.
now if you do this right now. You see, it's 1 point. You get paid 1.15, and the cost to close
Yep.
it is 0.86. Okay, so you actually,
So,
but the thing is though, on Friday it could recover. So if it
yeah.
recovers, then you can just get out of the trade. Okay.
Okay.
So I would
And
say
then,
it's better to let it get out of the trade and then look for better strike. In the future, we can go down instead of a 14 put, we'll do like a 12.50, 13. But let's first exit out the trade.
sure.
If it
Okay.
recovers, if it doesn't, we just keep rolling the put for more income, for more credit.
Sounds
Okay,
good.
exactly what you just did. Yes. But for now, yeah, today's a big day. Well, actually, tomorrow's gonna be a big day because today,
Hmm.
a lot of us, since you guys are working with me, we're really focused on Hood. A lot of people got a lot of money on Hood, so even myself, and we have made a lot of money on Hood. So you have made a lot of money on Hood too. So,
Yep.
so this is a good. This is what we want to focus on, right? These opportunities come and go. So after earnings is well, tomorrow is when more than likely is when the dust settles. Uh,
Cool.
but yeah, that's pretty much it. That's the game plan for that. Uh, we just need to let the earnings play out and then see how the market, how Hood is performing tomorrow, and then everything else. That's it. Just the rest will need to be done on Friday.
Sounds good to me.
Good. Okay.